Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Alfred Prevoo, managing partner at Blockchain Investments, as well as Jamie Burke, founder and CEO of Outlier Ventures, to discuss the value of NFTs and algorithms and what could be the next big trend, and how NFTs could play a role in the economy and finance. Gentlemen, it's great to have you with us. Thanks for joining us on Trade Talks. And Jamie, I'm going to kick it off with you. To what extent do you see the future of NFTs play a role in the economic and financial space, and of course in the metaverse?
Yeah, well, I think just today I was reading the Financial Times and it's reported that NFTs, I don't know the classification, but NFTs are now surpassed the size of the global art market. And I think that's just the beginning. So of course, that's the main success that we've seen in 2021. But as we move into 2022, we're seeing a much bigger range of use case applied to gaming and various other industry verticals. And so actually, the most exciting thing for us is to begin to think of these things as forms of collateral, especially in the context of DeFi. And that's something that we call MetaFi.
Right. And Alfred, what role do you think trading algorithms could play in that, as everyone is now focusing on investing and trading?
Yeah, I mean, trading is definitely becoming something for everyone, right? And the algorithms is just saying that I would like to trade in moments that I can't trade myself because I'm asleep. And especially in the crypto asset market, the market never sleeps. So algorithms are projected to increase as one of the biggest growth sectors that are there. And basically, I think it just makes sense. The crypto asset market really lends for it. And I think algorithms in itself are just, definitely going to be one of the biggest growth sectors that we're going to see in the next 5 years.
And Alfred, NFT bots are bots that can be traded as an NFT. Why is this important, and why do they provide value?
Well, the interesting thing is that if you want to create an algorithm or use an algorithm right now, you either have to have the knowledge or you're going to rent out sort of a black box of an algorithm. If you want a trading algorithm to increase your value, you have a lot of control that you need, and you basically would like ownership of it, but you don't always have the knowledge. NFT bots are basically saying this is a new type of way to acquire an algorithm and to own it and to control it. It's a new type of asset class in that sense. But the good thing is here that you have sort of proven results. So that really helps.
So how do NFT bots differ from NFT pictures?
Well, this proven results aspect is basically saying an algorithm can be back tested. So a bot can be back tested. You can say, what if a year ago from now, I tested my algorithm and I said, well, what would have happened if a year ago I would have started this bot? And the good thing is that if you have an NFT bot, you have full control. You don't necessarily need the knowledge, but you have sort of a proven performance. And I think that's where the real value comes in. And it's very, very tangible. It's very, very measurable. So I think that's just going to be very, very exciting to work with NFT bots.
Jamie, let's go back to MetaFi for a moment. Will this sort of development in new financial wave trading eventually play a role in MetaFi? And do you think this is a niche, or do you think it can become more of a main topic?
Yeah, well, so the interesting thing about NFTs as an innovation, especially in a financial context, is that most things in life are non-fungible, right? There's only very few things that are fungible, be it a commodity or a currency. And of course, that's where we've seen the majority of innovation in crypto to date. But with the advent of NFTs, we're starting to see that same kind of new financial architecture, new decentralized financial system being applied to a wider variety of use case, of asset type. And so really the kind of range of applications are near limitless. The easiest way to think about where we're most likely to see NFTs being deployed are in things where it requires both the asset to be unique, the provenance is important, but ultimately what we're talking about is a form of property right. And so if you think about the majority of the web today, whether it's social media platforms and the creator economy, whether it's gaming, the reality is the users of this platform, the users of a game, they don't have any property rights. They don't own the underlying asset. And that's really important in a financial context when you think of this as an economy, because they are effectively financially excluded from the existing financial system. So you can have several $1 million worth of gaming skins in Fortnite, but try to go to a bank and get a loan on that and you'll be laughed out of the building. So it's a really important thing from a financial inclusion perspective. And so the combination of NFTs and DeFi really kind of bring that to life. Now, to Alfred's point, the idea that you can begin to automate aspects of that become critically important, because as he said, we're operating in a 24/7 market. It's dizzyingly impossible to kind of keep up with. And often you want to be able to make sure that you can kind of participate in that economy whilst you sleep based on some very basic parameters. And so the value of these kind of trading algorithms, which themselves can be NFTs, I think can become very powerful.
That's a good point that you make, Jamie, that it is 24/7 and there's so many more applications that are being developed all the time. I mean, you have to sleep at some point. So to wrap up here, where do you see the biggest application of NFT for 2022 and how do you think that can develop over time?
Yeah, so what we're seeing is two things. So bearing in mind, we're an accelerator, so we operate at a very early stage of the market. So we're seeing things that may be 6 to 12 months away from normal venture or kind of later stage venture. And then, you know, maybe another year plus before they would kind of hit the kind of mainstream consumer market or retail market. But effectively, we're starting to see two things. One is the application of this concept of digital property rights into the gaming environments. There's still a bit of resistance there, both from the gaming platforms themselves and the user base. It's by no means a done thing that the average gamer understands the kind of true value proposition that we're seeing here. The other area that we're starting to see is with all the good traction that we've been making in this kind of NFT art or what's called PFP, kind of profile picture space, people are using NFTs to express themselves, to express identity, to express belonging, but that's been done in a fairly 2D way, right? And so what we're starting to see now is a social layer being built around NFTs, where the kind of socialness, the social context of an NFT can be experienced equivalent to a social network. But we're also starting to see that play out into different forms of media. So that's AR and VR environments where you can kind of have a more immersive experience around this kind of NFT as a kind of social asset, a social currency.
Interesting. All right, Jamie, Alfred, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having us.
Thank you.